Hello, everyone. Merrill Strachan here for Real Estate Investment Secrets, brought to you by TN3B Financial. And I wanted to jump online and share some information with you. I subscribe to a real estate newsletter, and I want to share some of the info that I got from their 2023 article year in review. The newsletter is called Building Market Intelligence Newsletter, and it's put out by John Burns Research and Consulting. Okay. And so I want to share some information with you about that. But before I can do that, we got to go to the disclaimer. So give me a second here. Okay, hold on a second. And let's do this right so we get this done. Okay, so here we go. Here's our disclaimer. This information is intended for informational purposes only. The opinions stated by the author are only opinions and are not intended for legal, financial, or accounting advice. When making decisions for yourself or for your business, please make sure to check with your own legal, financial, or accounting professionals. Okay, great. So we've got that disclaimer out of the way. And I wanted to share some information with you from that article. And so I'm going to show you this. It's, as I mentioned, it's John Burns Research and Consulting. And this is a great graphic that I wanted to share with you here, because look at this. What is this graphic saying? It's saying that 72% of Americans believe if interest rates are below 5.5%, 5.49 and lower, 72% of Americans believe that's when housing is affordable for them to purchase. And you can see from this graphic, above that is the remaining 18%, with 5% thinking with interest rates above 8%, it's still affordable to buy a home. All right. So that being said, I want to show you something else that they talked about in that year in review. Okay. Here we've got this graphic from their article that was saying that the national cost of owning versus renting, that now it is more expensive to own than to rent. That's what they're saying. Now, right now, it's more expensive to own than to rent. Basically, it's costs on average about $1,000 more to own than to rent in monthly expenses. So check out this graphic right here. This shows how much more expensive it is to own versus rent in various communities. In Indianapolis, it's 7% more. Cincinnati 11, Columbus 24, Tampa 21, Atlanta 24, Chicago 24, Jacksonville 27, Charlotte 39, Orlando 33, Raleigh Durham 40, San Antonio 44, Las Vegas 42, Houston 45% more. And so you can see all the way down to Austin, 77% more expensive to own than to rent. Look at that. $1,664 per month. And so this averages to be about $1,000 more per month to own than to rent. So why am I sharing this with you? Because we're hearing in the news, interest rates are too high, people don't want to buy. Yeah, that is correct. And that's what they're saying. And currently, interest rates are, and I Googled this, so here you go. Interest rates right now, I did the Google, with a 30-year fixed rate right now is at 7.03%. Okay. So you'd have to have interest rates drop 1.5% on a 30-year fixed conventional loan for people to start to think that it's better to buy and it's better, the market's a right time to buy. Okay. FHA loan, these are rates as of today, 6.24%. So FHA loan, we need to see for that, we need to see that one just drop 0.75% for us to get into that 72% window. A VA loan, 6.42%, a USDA loan, 6.82%, and a jumbo loan, 7.06. And a jumbo is anything above the FHA cap. All of you should be investing in properties that are under the FHA market cap for your community, because that's where you're going to get the greatest number of people who are able to buy. So why am I sharing all this with you? Well, it's quite simple. All right. Here's the deal. It is projected that come May 2024, we're going to see the rates have dropped down to that 5.5%. Okay. So we're going to get to 5.5 or below. And at that point, people are going to start to say, now's a good time for us to buy. All right. So what should you be doing? You should be getting your properties under contract now. Get your fix and flips under contract now. Get that rehab coming now. Get and push that job, get it done. So when those rates, should they drop in May 2024, which is only what, 4 months away? Once they drop, you immediately get your properties listed, and then you have the potential for there to be bidding wars on your properties and property selling above asking price, because you've now got a major part of the market that now believes it's affordable to purchase houses again. All right. So that's what you need to be doing. All right. We're here to help you. T&3B Financial is definitely here to help you out with your funding needs. We can help you out with fix and flip loans. We can help you out with loans for rental properties, both short-term and long-term, rehab loans, new construction loans, and we're even about to roll out, some assistance with sub-2 funding. All right. Hey, we're here to help. And as I said before, all real estate, all of us, you, me, we're real estate investors. And we're one deal away from something. We're just one deal away from something. Okay. We're one deal away from quitting that 9 to 5 job. One deal away from making an impact in your community. One deal away from realizing your purpose, your personal purpose. One deal away from securing your financial freedom for your family. We're all one deal away from something. I hope you found value in this video. Please make sure you like and subscribe to the channel. I'm here for you. I'm here to help you. And let's go out and get that next deal. Bye now.